Now 97,500 we have taken. Then it is 1,04,800. Next it is 1,26,900, and last one 68,200. The total of PV of cash inflow is 4,37,700. 4,37,700 is the total of PV of cash. Outflow is 5 lakh. Now we have to increase. Actually we want 5 lakh, but we don't have 5 lakh. We have only 4,37,700. To increase the PV of cash inflow, to increase the PV of cash inflow, we decrease the rate. We decrease the rate. Let the new rate be. Let it be, we take, how much we should take, difference is very high. More difference is there. So instead of 24%, 20% can we take 20% or 18% will take. 18%. 18% will take. So because difference is more, that's why I have taken a big margin. I have taken a big margin of 18%. So 18%, the values are 1 divided by 1.18 is equal to 1 divided by 1.18 is equal to 0.847 is equal to 0.718 is equal to 0.609 is equal to 0.516 is equal to 0.437. That's it. We got 18% values. Now multiply 50,000 into 0.847. You are getting 42,350. Similarly, 1,50,000 into 0.718. 1,07,700. Similarly, 2 lakh into 0.609. 1,21,800. Similarly, 3 lakh into 0.516. 1,54,800. 2 lakh into 0.437. 87,400. Plus 1,54,800 plus 1,21,800 plus 107,700 plus 42,350. You are getting 5,14,050. Value is greater. 5,14,050 is greater than 5 lakh. So at cash inflow at 18%. 5,14,050. Cash inflow at 24%. 4,37,700. Cash outflow. Therefore, IRR lies between 18% and 24%. 18 और 24 के बीच में IRR है. So actual IRR will be computed by the interpolation formula, just like the machine A. RL lower rate is 18%. PV of cash inflow at 18%, 5,14,050 minus 5 lakh. Difference. What is the difference? 18, 19, 20, 21, 22, 23, 24. 6. 14,040 divided by. Now we'll find the difference. 5,14,040 minus 4,37,700. You are getting 76,350. $14,050 divided by 76,350 into 6. 1.10. So 19.10 is the answer. That's it. So we have calculated PBP, we have calculated NPV, we have calculated IRR. On the basis of these three criteria, we have to give the suggestion which machine should be purchased, which project should be purchased. So to make a comparison, we'll make a table A machine, B machine. First PVP, second NPV, third IRR. See, IRR just now we have calculated 19.10%. So already we have calculated the NPV and PVP. PVP is 2.6 and 3.33. NPV is 1,53,850 and 1,48,650. IRR is 22%. That's it. These are the calculations already made. Now on the basis of this, we have to give the conclusion ranking. PVP is lower for A machine. So we suggest A machine. A machine should be given first rank. NPV is more for A machine. Again, first rank for NPV. IRR is also more. So according to PVP, NPV and IRR criteria, we suggest the company to purchase machine A. Since for all the three criteria, machine A will get the first rank. So comparatively more time will be taken to calculate the IRR compared to PVP or NPV or PI. Now see the next problem, that is 29th problem. 29th problem you see. The expected cash flows of a project are as follows. Year 0 year ka matlab at the beginning, right now there is a cash outflow, that's why it is given as 1 lakh. So PV of cash outflow is 1 lakh. Inflow are 20, 30, 40, 50, 30. Cost of capital 12%. Calculate the following: internal rate of return and discounted payback period. First time we are coming across this discounted payback period. Actually payback period दो तरह का होता है, normal payback period, discounted. अगर खाली payback period पूछा तो normal payback period, just now previous problem में हम calculate करें. Now it is asking you discounted payback period. That is the second question. First we have to calculate the IRR. So right now, calculation of IRR, 29th problem. Calculation of IRR. So first we calculate fake PVP. For fake PVP we calculate average cash inflow. Average cash inflow are 20,000 plus 30,000 plus 40,000 plus 50,000 plus 30,000. 1, 2, 3, 4, 5 divided by 5 is equal to, you are getting 1,70,000 divided by 5. So you are getting 34,000. 34,000 is the average cash inflow. Now fake PVP. Fake PVP is equal to initial investment how much? 1 lakh. Initial investment is 1 lakh divided by 34,000. So you are getting 2.941. 2.941 fake PVP. Locate 2.941 or nearest in PV of annuity table against year 5. 5th year के लाइन में देखते जाइए 2 point, तो 21%. 2.926. 2.926 we got. At what percent? 21%. Therefore, we begin our calculations at 21%. Year cash inflow, PV factors 21%, PV of cash inflow. 1, 2, 3, 4, 5. PV of cash inflow. So cash inflows are 20,000, 30,000, 40,000, 50,000, 30,000. Now we need PV factors. PV factors at 21%, 0.826, 0.683, 0.564, 467, 386. Multiply 16,520, 20,490, 22,560, 23,350, 11,580. The total is 94,500. PV of cash outflow 1 lakh. So IRR is that rate at which inflow and outflow both should be same, but here it is not same. Here we are getting less. To increase the PV of cash inflow, we decrease the rate. Let the new rate be 16%. Okay, now you may get one doubt in your mind. Why to take 16%? We can take 15%. We can take 17%. Yes, of course, you can take. हम एक आर्बिट्रली इससे बड़ा रेट चाहिए, इससे छोटा रेट चाहिए, 21 से छोटा रेट चाहिए, क्योंकि जितना छोटा करेंगे ये बढ़ेगा. पीवी ऑफ कैश इनफ्लो इंक्रीज करने के लिए वी हैव टू डिक्रीज. अब डिक्रीज करने के लिए डिफरेंस ज्यादा नहीं है. 94,500 से 1 लाख रुपीस हार्डली 5,500 का डिफरेंस है. 5,500 का डिफरेंस है. सो ओनली आई हैव टेकन 5%. 21% से 16% पर आ गए. तो नाउ पीवी फैक्टर्स एट 16% एंड पीवी ऑफ कैश इनफ्लो. अगर नहीं आया तो फिर एक बार चेंज करेंगे. इफ यू आर नॉट गेटिंग, अगेन वी हैव टू टेक सम अदर रेट. तो एट 16%, 0.862, 0.743, 0.641, 0.552, 0.476. If you multiply this with PV factors, you will get 17,240, 22,290, 25,640, 27,600, 14,280. The total is 1,07,050. Now it is more than 1 lakh. We got it. PV of cash inflow at therefore IRR lies between 16% and 21%. That's it. अब 16 और 21 के बीच में IRR है. So to find out the IRR, again we apply the interpolation formula. We apply interpolation formula. IRR is equal to RL plus PVCF80 lower rate 16%. 1,07,050 minus 1 lakh. 1,07,050 minus 94,500 into 5. 17, 18, 19, 20, 21. 5. Correct. 16 plus 7,050 divided by 12,550 into 5. 16 plus 2.81, that is equal to 18.81%. So we got IRR is equal to 18 point. Finished. So one calculations we have done, that is I. Secondly, we have to find out the discounted payback period. Discounted payback period. Here cash inflows, then PV factors. Discounted payback period, at what rate we have to take? 12%. Cost of capital is 12%. PV of cash inflow. Now we take cumulative. So an ordinary payback period and discounted payback period, the only difference is discount factors we are taking here. अगर ordinary payback period अगर रहता तो ये discount factor नहीं रहता था, directly cash inflow into PV of cash inflow. Sorry, cumulative cash inflow. तो cash flow cumulative cash inflow normal में. अगर discounted रहा तो PV factors लेकर PV of cash inflow मालूम करेंगे, cumulative PV of cash inflow. Cash inflows are 20,000, 30,000, 40,000, 50,000, last one 30,000. Now PV factors 12%, 0.893, 797, 712, 636, 567. Now multiply this, we'll get 17,860. Next one 23,910. Next one 28,480. Next one 31,800. Lastly 17,010. Cumulative 17,860. 41,770. That's it. So we have calculated cumulative PV of cash inflows. Cumulative PV of cash inflows. Now interpolation. PV of cash outflow. One lakh. Now look at 1 lakh in the cumulative column. We don't have 1 lakh. We have 70,250. We have 1,02,250. So amount recovered up to the end of third year, 70,250. Amount to be recovered in fourth year, 1 lakh minus 70,250 is equal to 21,750. 21,750 we have to recover. 29,000, sorry, not 21. 29,750. We'll confirm it. $29,750 we want to recover. Now cash inflow of fourth year. Fourth year cash inflow is 31,800. So PBP is equal to 3 years plus 29,750 divided by 31,800. 29,750 divided by 31,800, 0.94. That's 3.94 is the discounted PBP. This is the discounted PBP. Now, see the 30th, problem number 30. Problem number 30, you see. A project requires an investment of 1,44,000 and is expected to generate cash inflows of 54, 63, 72, 63, 54,000 per annum for the next 5 years. Risk-free rate 10%. Evaluate the project using IRR method. So, pehla question. First question we have to calculate IRR. Secondly, if the following certainty equivalents are to be considered, how would you evaluate and interpret the project? Second question, if certainty equivalents are taken into account, what will be your interpretation in the second case? First case, you have to calculate the IRR. This is problem number 30. Calculation of IRR. Average cash inflow is equal to total cash inflow divided by 5. The total cash inflows are 3,06,000 divided by 5. It comes to 61,200. Now, fake PBP. Initial investment is 1,44,000 given in the problem. Divide by 61,200 is equal to 2.353. Against year 5. So what we see is at 32%. The factor is 2.345. तो इसके खरीब वाला वैल्यू चाहिए तो 32% की लाइन में दे, 32% के कॉलम में देखिए, 5th ईयर की लाइन में, 5th ईयर की लाइन में रो में 32% के कॉलम में you are getting 2.345. Therefore we begin our calculations at 32%. I am keeping this space blank because we will take other percentages here. PV of cash inflow. The cash inflows given in the problem are 54,000, 63,000, 72,000, 63,000 and lastly 54,000. And 32% PV factors 0.758, 0.574, 435, 329. Then 250. Multiply, we'll get 40,932. Then 36,162. 31,320. 20,727. 13,500. Now total is 1,42,641. 1,42,641. But we need how much? We need 1,44,000. PV of cash outflow is 1,44,000. So here we got 1,42,000. We got less amount. To increase the PV of cash inflow, we decrease the rate. We decrease the rate. Let the new rate be 28%. Earlier we have taken 32%. एक 4% कम कर देंगे, 28% ले लेंगे. At 28% we'll see. अगर नहीं आया तो फिर चेंज करेंगे. PV factors at 28%. What we require is one amount should be more than 1,44,000 and the other amount should be less than 1,44,000. At 28%. At 28%, the PV factors are 0.781, 610, 477, 373, 291. Multiply 40 to 174, 38,430, 34,344, 23,499, 15,714. Total is 1,54,161. So we got one value more, one value less. PV of cash inflow at 28%, 154,161. PV of cash inflow at 32%, 142,641. PV of cash outflow 1,44,000. Therefore, IRR lies between 28% and 32%. So actual IRR will be calculated by interpolation formula. (28 plus 154,161 minus 1,44,000 divided by 28 plus 10,161 divided by 11,520 into 4. 28 plus 3.53, 31.53%. That's it. This is the IRR. This is the IRR. The first point we have completed. It is asking you to calculate the IRR. Now we have to find out the NPV. Evaluate the proposal if certainty equivalents are applied. If certainty equivalents are applied. Now calculation of PV of cash inflow by taking CE into account, certainty equivalent coefficient into account. Year, cash inflow, CE factors, then expected cash inflow, PV factors at the rate of, what is the rate of discount given in the problem? 10%. PV of cash inflow. 1, 2, 3, 4, 5. So cash inflows are given as 54,000, 54,000, 63,000, 72,000, 63,000, 54,000. And certainty equivalent coefficients are given in the problem: 0.96, 0.92,